Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, how is the FX market behaving?
Well, we had the opening after the long weekend yesterday. It was interesting to note that maybe in the forex market, the main move which characterized the day was the strengthening of the US dollar. It was characteristic that the US dollar against JPY reached a new 24-year high. It hasn't seen such levels since 1998. We have to note that also US yields tended to be on the rise, which provided further support for the greenback, while on the flip side, we have to note that the JPY tended to weaken given the monetary outlook differentials from the BOJ, which tended to weigh a bit. It was characteristic that the reaction of safe havens was not similar. Say, for example, JPY weakened against the US dollar, while CHF, the Swiss franc, tended to remain rather unchanged against the USD. A Swiss franc, which, mind you, had the Swiss National Bank hiked rates, double rate hike, which took the markets by surprise. So we can see here how exactly the interest rate differentials play a role in the direction of the currencies, which in the case of JPY, it weakened them, while in the case of CHF, there was a stabilization.
And how are US stock markets moving?
Well, US stock markets yesterday tended to gain. It was quite interesting, given that we had also a warning being issued by Elon Musk. The billionaire practically mentioned that it's more likely for the US economy to have a recession than not. Also, he highlighted that there's still some issues about the Twitter deal, of him buying Twitter and taking it private, and also mentioned the possibility that there will be practically firings within Tesla. If I'm correct, it was 3.5% of the total headcount was mentioned. Overall, though, the markets practically neglected the comments and maintained a bullish attitude. I would dare to say that they tried to recover some ground after the steep sell-off which occurred in the stock markets practically last week. On the flip side, though, during today's Asian session, the main indexes, all three of them, Dow Jones, Nasdaq, and S&P 500, had started to drop. So practically the correction higher may prove to be just a correction. We'll have to wait and see how the American session actually opens and see what the market sentiment once again is heading to, whether we're going to be having a new switch towards the bearish side this time, or if the bullish tendencies are going to be reaffirmed.
Okay, and what's in the calendar today?
We have a heavy calendar today. We already made a start with UK CPI rates. Those were for May. A tick up occurred. It went up. The headline rate accelerated from 9 to 9.1% year on year. On the other hand, though, we have to note that there was a wide deceleration of the month-on-month rate. So inflationary pressures are still present in the UK economy, but seem to be subsiding somewhat for the month of May, which tended to weaken the pound actually. And cable, those characteristics that cable continued to drop lower, even a little bit. Other than that, we highlight from Canada, especially the BOC core CPI rates. Should there be an acceleration, we may see practically the CAD getting some support, as that could enhance the hawkish stance of Bank of Canada. At the same time, CAD traders may be keeping also an eye out for Caroline Rogers, which is the deputy governor of Bank of Canada, and should she sound somewhat hawkish once again, we may see the CAD getting some support. And the last item, more on the fundamental side, for CAD traders would be oil prices. Oil prices could affect, should there be further movement to the downward of oil prices, we may see the CAD relenting some ground and use the CAD gaining.
Interesting.
We're having also to mention here that we don't have any US releases, but we have a high number of Fed policymakers. And mind you that yesterday we had Richmond Fed President Barkin. He made some comments about Chairman Powell's comments and forward guidance about the next meeting deciding between a 50 and a 75 basis points rate hike. So that more or less tended to reaffirm some hawkish expectations for the market, which provided some support for the US dollar. Today we have Fed Chairman Powell. He will be testifying before the US Congress. It's the first testimony of two. Should the Fed Chairman sound hawkish enough, we may see the US dollar actually gaining further. And I would also be highlighting today in the American session the preliminary consumer confidence that's for the Eurozone for June. A slight improvement is expected, which could provide some support for the common currency. During tomorrow's Asian session, we make a start with the preliminary PMI figures. That's from Australia and Japan. For Japan, it's going to be the manufacturing PMI figure. From Australia, we get the manufacturing, the services, and the composite PMI figure. All preliminary, all for June. Should the indicators rise, we may see the Aussie and JPY getting some support, as they would imply practically a faster expansion of economic activity in the respective sectors. So that's another issue, but for tomorrow's Asian session.
Great. Do we get also from the Czech Republic CNB's interest rate decision?
Yeah, right, I forgot about that. We get from the Czech Republic today, in the late European session, CNB's, Czech National Bank's interest rate decision. Now the bank is widely expected to hike rates by 100 basis points. Mind you that in the past meeting, the bank had decided on a 75 basis points rate hike. So since then, the CPI rates accelerated even further, which may have been even a slight shock for CNB policymakers, as the bank has been hiking rates consecutively for a couple of months now. And that would practically force the bank to widen the rate hike to 1 full percent. We may see the bank also issuing a hawkish forward guidance, foreshadowing more rate hikes to come. I would even dare to say that the market expects it, and maybe anything less than a full point rate hike plus a hawkish forward guidance could weaken the krona. So it's going to be a little bit of an issue. I would like to see how that actually plays out and what the announcement will be stating as such.
Interesting. As we're in the European theater, what did ECB's Philip Lane say yesterday?
ECB's Philip Lane made some statements yesterday. By the way, mind you that Philip Lane is the chief economist of the ECB. So his statements tend to gain more attention. Philip Lane actually reaffirmed the bank's intentions for a 25 basis points rate hike. That's in July. However, left open the possibility of a wider rate hike in September. Practically, he mentioned that the bank will not revisit the decision for a 25 basis points rate hike in July. That's written in stone. The big question now is whether the bank will widen the rate hike in September or not. Whether the bank is going to be moving towards a 50 basis points rate hike in September, or whether it's going to be moving to a 25 basis points rate hike for a second time. We will have to wait and see once again on this, but overall the statement reaffirmed the bank's rather hawkish intentions and may have provided some support for the common currency.
Okay. Finally, in the commodities market, how are oil prices moving?
Oil prices had an interesting move. Actually, yesterday dropped widely, and during today's European session renewed the drop. And once again, it was pretty wide. If I'm correct, WTI had reached, the last time I checked, at around $103 per barrel. I would dare to say that the upward motion now has been broken. And we are considering now a sideways or even a bearish scenario for WTI's prices. The main fundamental issue which may have provided the push for the bears to take over could have been the possibility of a recession in the US economy, which is quite wide, and such a recession could practically lower the demand for the commodity. At the same time, we have to note that US President Biden is discussing possibilities with Congress as well as with big US oil companies of reducing their prices, which is a big issue in the US. So that could have enhanced practically the bearish tendencies for the oil market. I would also note today's AP weekly crude oil inventories figure. Should there be another surplus, actually another buildup of inventories, of US inventories, that could intensify bearish tendencies, as it would imply practically that the US oil market has a slack and production levels have surpassed demand levels, and creating a rise of the inventories figure, the stocks, oil stocks in the US.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome to the analysis part of the presentation today. In front of your screens, you have WTI's maybe the most intense move of the market today, at least until as we're speaking right now. It's interesting to note how the price action has been moving intensely downwards. However, let's drill down to the 4-hour chart. You can see that there has been a drop that was on Friday, stabilization, even a little bit edging higher. Yet practically since today's Asian session, WTI's price has been dropping, practically reaching almost 4 per barrel, which has not been seen since over a month now, since the 19th of May to be exact. So we may say rather safely that the upward movement has been interrupted. It's interesting to note how, there you go. This has been broken as well. Drilling down to the 4-hour chart, a new downward trend line has been starting to form. Consecutive lower peaks and lower trough. So we tend to switch our bullish outlook in favor of bearish outlook initially. And as long as the price action remains below the downward trend line, which we have just drawn, we tend to maintain our bearish outlook for WTI's price. However, we will have to make some readjustments regarding the resistance and support levels. Actually, as the price action has broken the 107.55 and the 105.10, going to have to return them to resistance lines, and let's go hunting for new support lines. Actually, there's one right there. There you go. The first would be the 97.90. The new second support line, which had a touch as a support line here, and there's a resistance line here and here. While even lower, we note the 94.96, 94.95. Could be a little bit higher, 95 maybe. Let's have a look. Let's readjust. It's no longer necessary. There you go at 95 being the S3. $97.90. $101.25 being the first support line. $105.10 being the first resistance line. $107.55. And the last one being at 109.90. Could it be that we have another support line? Mid-level? No, let's keep it here. So for the time being, WTI's price excuse me, has been dropping. We tend to maintain a bearish outlook for the commodities price as long as it remains below the downward trend line, which has started to form and has been guiding WTI's price since the 14th of June. Please note that the RSI indicator just below our 4-hour chart is nearing the reading of 30, which tends to confirm the presence of the bears for the commodities price. But the RSI indicator actually break below the reading of 30, then we may be approaching oversold levels and the correction higher could be in the cards. For the time being, we still have some room to advance. However, I have to note that the price action seems to be pretty near the lower Bollinger Band. Note how the price action actually was forced higher after hitting on it. So the drop may slow down a bit. Should the bears actually maintain control, we would keep the 101.25 as the first support line, which provides support right here. Should S1 be broken and the price action starts aiming for the 97.90, which provided some support here, while even lower we have the 95.50. To the upside, we note the 105.10, which used to be a support line, has now been turned into a resistance line, given also that the price action has broken below it. The second resistance line would be 107.55, and the third resistance line a little bit higher. Let's readjust this. Somewhere here. Being at 110.85. It's obvious that we have opened our support lines in order to accommodate the wide drop WTI's price. So let's allow for some room for the bears to actually move in. Note how the price action has now been turned to a bearish outlook. Let's have a look now at the most interesting move of yesterday. That would be the US dollar against the JPY. Here it is. Note how the price action had moved in an upward motion and seems now to have broken the upward trend line. It has actually broken the 135.60, which is now to be turned into support line. Well, the next resistance line could be placed at 140. Sorry about that. 131.50. Now the first final resistance line readjust. Note how the price action was not able to reach the 137, so let's lower it a little bit. That descends down to 136.80. Could be even lower. 106.70. 75. We have new resistance and support lines. Let me adjust the labels as well. And the 136.75. 138.50. And the 140. Now, given that the upward trend line seems to have been broken, should it be clearly broken, that would force us to switch our bullish outlook for USD/JPY into a bias for sideways movement, probably between the 136.75, which capped the upward motion of the pair yesterday, and the 135.60, which used to be a prior resistance line. Given that the price action has broken the resistance line, has now been turned into support line. To the downside, should the S1 be broken, we also note the 134. Even lower, we have the 133. To the upside, should the 136.75 and the bulls take over, we may see the price action aiming, if not reaching, the 138.50, while even higher, we note the 140. Note that practically the pair has reached quite high levels. It's characteristic that if we drill up to the, let's have a look at the weekly chart first. Nope. Monthly? Nope. Don't have no price action lower or higher than that. Nevertheless, it definitely has reached a 24-year high. That's since 1998. That could cause the bulls to hesitate. And when definitely within a level which may trigger BOJ to actually intervene in the market to defend again, it's pretty low for JPY. However, diverging fundamentals tended to intensify the move to the upwards, as on the one hand the US dollar got some support, and BOJ's monetary policy outlook seems to be weighing on JPY. Note how on the RSI indicator is just below the reading of 70, implying practically that the bears are still present, the bulls are still present for the pair and could push it higher once again. So for the time being, we tend to maintain a bias for sideways movement. However, I wouldn't be surprised to see the bulls taking over once again here. Let's have a look at the USD index. The USD index, which broke the symmetrical triangle, let's readjust this, and moved slightly to the sideways between still 105.55 and 103.20, edging up just a bit, but it resembles more sideways movement, a tight range-bound movement with a little volatility. It's characteristic how the Bollinger Bands are converging. Note also that the RSI indicator below the 4-hour chart is just above the reading of 50, which tends to also imply a rather indecisive market. I would tend to maintain a bias for sideways movement between the pre-mentioned levels, the 105.55, which was tested as a resistance line here, and the 103.20, which provided support here, but also here. That would be around the midst of May. To the downside, and should the bears take over, we may see the price action breaking the 103.20 and start aiming for 101.30, which provided support here. Delete these ones. There we go. To the upside, and should the bulls take over, we may see the price action of the USD index, the XY, breaking the 105.55 and start aiming for the 107.50. Okay. Let's have a look now at EUR/USD. Now, EUR/USD has been moving in a sideways motion despite the drop. It did not actually escape the boundaries of its sideways movement, so the bias still stands. Note how the drop practically was halted at the 1.0480, which was support line, while actually yesterday it failed to reach the 1.06 to revisit that level. We tend to maintain a bias for sideways movement between the R1 1.06 and the S1 1.0480. Note also how the RSI indicator tends to remain near the reading of 50, also implying a rather indecisive market, while the Bollinger Bands reflected mostly the downward motion by downward slope, yet that seems to be stabilizing as well. Should the bulls take over, and we may see an upward movement in that case. However, for the sideways bias to change in favor of a bullish outlook, we would require clear breaking of the 1.06 and for the pair to start aiming for the 1.0755, which provided resistance multiple times around this time, which would be around the last days of May and the beginning of June. To the downside, and should the bears take over, we would require a clear breaking of the 1.0480 before switching in favor of bearish outlook. And in such a case, we may see the price action paving the way practically for the 1.0355, which provided support once, twice, once again, for the time being, bias for sideways movement between the 1.06 and the 1.048. Let's have a look at the cable, and that would be GBP/USD. Now that's interesting. Now cable dropped substantially. Any bullish tendencies were exterminated. Practically even at some point broke the 1.2165. You can see it here. However, quickly recovered and hovered just above it once again. That's during today's European session. I would maintain my bias for a sideways movement, given also that the RSI indicator tends to remain near the reading of 50. Now to switch it in favor of a bearish outlook, we would require clear breaking of the 1.2165, and I would like to see some peaks below that level, below this one. That would be signaling a bearish trend line has started to form. In such a case, we may see the price action actually breaking the 1.2165 and start aiming, if not breaking, also the 1.2070. On the other hand, should the bulls take over, we may see the price action breaking the 1.2330 and start aiming for the 1.2470, which used to be prior support line and has now been turned into resistance line, given that the price action is below it. Let's have a look now at the CAD. Okay, that's interesting. Now the CAD had a prior downward motion that was practically from Friday onwards, yet during today's Asian session, it broke it. There was some stabilization in the late American session, and during the Asian session, it was successful in breaking the upward trend line, breaking also the 1.2970 resistance line, which now turns to support. Let's readjust this. Drilling down to the forward chart. Okay, there's a peak here. There's another peak here. The third one here. The fourth one. I would be choosing this initially. Yep, it has a double touch here and here as well. Let's keep this one. Being placed at 1.3330 in red, please. Having new higher resistance line. Let's correct now the new labels. Placed with the S3 at 1.2730, the S2 at 1.2865, the S1 at 1.2970, The R1 at 1.3075. The R2 at 1.32. The R3 at 1.3330. Now there seems to be some bullish tendencies for USD CAD, and those characteristic that the downward trend line has been broken. Hence, we switch our bearish outlook in favor of bias for a sideways movement. It would be a rather wide sideways movement between the 1.3075 resistance line and the 1.2865 support level, with the 1.2970 being a possible mid-level. It's characteristic how the pair used it in the past as a mid-level as well. Note the support here, the resistance here, resistance here, resistance here. I wouldn't be surprised to see traders taking notice of the level once again. Note how the RSI indicator has risen above the reading 50. Yet still remains pretty close. It's at 57. I wouldn't call it a bull. I would require clear movement to the upwards, a breaking of the 1.3075, and for the pair to start aiming for the 1.2 before calling in the bulls here. On the flip side, should the bears take over, would expect the price action to break the 1.2970, the 1.2865, and start aiming for the 1.2730. Anything above 1.2865 and below 1.3075 could be considered as a continuation of the pair's sideways movement, in which case a trader could start selling when the price action reaches the R1 and start buying when the price action nears the S2. Let's look at the Aussie. The Aussie has broken triangle, which had started to form to the downwards, another indication of the strengthening of the US dollar. Now the 0.6950 is being turned into a resistance line. Let's readjust. We have the 0.6620. Let's have a look also where this actually rests. Somewhere here should be a prior resistance line. Daily chart. Here it is. Those provide some support here. Back to the 4-hour chart. Realign. 66.20. 67.30. Yep. $0.6850. First resistance line now being prior support line 0.6950. Second resistance line being placed at 0.7035. Final resistance line being placed at 0.7155. we tend to maintain a bias for a sideways motion between the 0.6850 and the 0.7035 for the time being, with the mid-level being the 0.6950. Note how that was tested a number of times, while the upper boundary is being placed here and the lower boundary here. Okay. It's quite interesting as well. Nevertheless, the bears seem to be present, and should they actually take over and guide the pairs to lower grounds, we would expect it to break the 0.6850 and start aiming for 0.6730. Actually, the breaking of the S1 0.6850 would be a prerequisite for us to call it a bullish outlook. Should the bulls take over, I would expect the price action to break the 0.6950, and I would require also the breaking of the 0.7035 before I call in the bulls. Maybe even start aiming for 0.7155. Interesting. Let's have another look now at USD-CHF. Tight range-bound movement. And it's very, very interesting to note. Let me readjust the levels here just a bit. It's interesting to compare also on tech level the movement of the US dollar against safe haven JPY on the one hand and safe haven CHF on the other. We can see how the price action has steadied after SMB's surprise double rate hike, while against the same currency, the US dollar, another safe haven JPY is on the rise. It's dropping, sorry, it's weakening. It has relented some ground. So I tend to maintain a bias for a sideways movement. Actually, the price action seems pretty tight range bound here. And it's characteristic that note how the upper Bollinger Band and the lower Bollinger Band converged and have narrowed substantially, indicating the lower volatility of the pair. Nevertheless, the RSI indicator seems to remain below the reading of 50, actually aiming a little bit downwards, which could imply the presence of the bears. Okay, should be taken into notice, but we tend to maintain our outlook for a sideways movement for the pair. For it to change in favor of a bearish outlook, we would require clear breaking of the 0.9640 and for the price action to aim, if not even breach, the 0.9550, which provided support here. While even lower, we note the 0.9455. To the upside, and should the bulls take over, we would expect the pair to break clearly the R1, 0.9765. The question is whether we have to readjust this level. Let's have a look here. Yeah, that would be better. Why? Because you have a peak here. I will show here. However, this is far more solid. Let's keep it. 0.9765 it is. We would require for a bullish outlook to occur the R1 0.9765 to be broken, and for the price action to start aiming for 0.9875. That would be something like this. Okay, let's have a look now at gold. Gold's price has been dropping. This is the chart of XAU USD. Let's draw the trend line. Somewhere like this. We're reversing the price support line, which has been broken now into resistance line. Let's go hunting. Let's delete this. Let's go hunting for another support line. I would prefer this true here rather than this one. Green, and it's being placed at 1762. Let's readjust. $87. $1,836, the new support line. Note how it was tested here and here. That's actually now the 1807. $1836 becomes the new resistance line, the first resistance line. 1870 becomes the second resistance line. And 1903 becomes the final resistance line for gold's price. Remember, this is the 4-hour chart. Note the wide sideways movement here. While the price action of the precious metals seems to be guided by downward trend line, at least since the 17th of the month. So any further strengthening of the US dollar here could push gold prices even lower and start aiming, if not breaking, the 1807 support line. Note on the other hand how the RSI indicator is definitely below the reading of 50, which is a bearish sign. On the other hand, though, seems to be correcting a little bit to the upward, which may imply that the bears may be losing some steam, while at the same time the price action is just on the lower Bollinger Band here, and which is providing some support for gold's price action and could push it a little bit higher. So some correction could be placed and the downward trend line could be shifted. Yet should the downward trend line be clearly broken and the price action breaks above the 1836, that would be an idea that the downward motion has now been stopped and the trend has changed. Initially, we would be favoring a sideways movement. However, that would depend also on how wide the movement to the upwards will be of the precious metals price, which could push it even higher to the 1870 resistance line. Beautiful chart. From all of us here at IronFX, best wishes for solid trading.
Once you have chosen your preferred trading instrument, the next thing will be to set up a plan. You will need to do a technical and fundamental analysis to understand the circumstances surrounding your trading, and then decide at what moment you enter the market, on what direction and which volume you are setting your trade. Also, you will have to define at which price you enter and at which you exit the market. There is no such thing as the perfect entry and exit. Stick only to the entry and exit parameters in your plan. Harness the technology available. Set automatic stop loss and take profit orders. Try to set the emotions of greed and fear under control, but have no misconception and emotionless trading cannot endure, so be conscious about your trading. Maintain discipline and your bottom line will thank you for it the long run. I can tell you, I see so many people on YouTube, on blogs, on social media trying to make videos to show people how to trade. The first thing you need to know about trading is that it has to express your uniqueness. The best traders in the world are the best because they know who they are original, they are confident in their ideas, and they're more than confident to display their uniqueness through their trading. The USD tended to gain against its number of its counterparts yesterday as the US markets reopened after a long weekend, with maybe the most characteristic move being against the JPY as USD JPY reached new 24-year highs. It should be noted that the rise of US yields tend to provide additional support for the greenback, while at the same time the monetary outlook differentials of Bank of Japan tended to weigh on the Japanese currency. On the monetary front, we also note that Richmond Fed President Barking add to the hawkish rhetoric of the Fed by reaffirming Fed Chairman Powell forward guidance for a 50 or 75 basis points rate hike in the next meeting, characterizing it as reasonable. Today we highlight Fed Chairman Powell's first testimony before Congress, which is to be followed by a second one tomorrow. And should the Fed Chairman sound hawkish, given also his past forward guidance, we may see the USD getting some support. At the same time, US stock markets tended to rise as they tried to recover from a deep sell-off last week, yet at all main index for the US stock markets. Dow Jones, S&P 500 and Nasdaq started correcting lower during today's Asian session. Also yesterday, Elon Musk stated that the recession in the near term is more likely than not, while at the same time also stated that there are a few issues to be resolved for the Twitter deal. Yet the statements did not seem to adversely affect the markets. No high-impact financial releases are expected from the US today. Yet we have a high number of Fed policymakers which are about to make statements, and overall we may see fundamentals leading the markets today. North of the US border, though, we get Canada's CPI rates for May, and a possible acceleration could provide some support for the loonie as it could intensify the resolve of Bank of Canada to curb inflationary pressures with further rate hikes. CAD traders, on the other hand, may also pay close attention to BOC Deputy Governor Rogers' speech later today for any clues about the bank's intentions. Similarly, across the pond, we also expect the release of UK's CPI rates for May, and possible acceleration may include Bank of England to widen its rate hikes instead of the usual 25 basis point rate hikes it performs, which may provide some support for the pound today. We would also like to note from the Czech Republic CNB's interest rate decision. The bank has been hiking rates, and characteristically in the May meeting proceeded with a 75 basis points rate hike. Yet the CPI rate accelerated further in May, reaching 16% year-on-year, a level not seen over 25 years, handling probably a shock to CNB policymakers. Today we would expect the bank to hike rates once again, probably with a 100 basis points rate hike, and at the same time remain substantially hawkish, foreshadowing more rate hikes to come. Moving to the commodities, from oil traders may keep an eye out for the API crude oil inventories figure, and should the release show that US oil reserves rose substantially in the past week, we may see oil prices slipping and vice versa. GBP USD failed to clearly break the 1.23 resistance line yesterday, which tend to reaffirm our bias for a sideways movement of cable. We note that the RSI indicator remains near the reading of 50, implying a rather indecisive market for the time being. Should the pair find fresh buying orders along its path, we may see it breaking the 1.23 and aim for the 1.2425 level. On the flip side, should a selling interest be present, we may see the pair breaking the 1.2160 support line, aiming for lower grounds.